Hello, I'm the Stock Picker of thestockpickerletter.com. This is the second video in a three-part series on how to be a profitable momentum trader quicker, easier, and with paying less tuition than going it alone without using my 25 plus years of trading experience. If you haven't watched the first video entitled The 10 Worst Mistakes Traders Make, I recommend you stop this video, head over to the stockpickerletter.com website and watch video 1 first, and then come back to this video entitled A Rules-Based Trading System. Now let's get to it. The first rule is trade with the trend. Trade with the trend seems logical and a given that it doesn't even need mentioning. Unfortunately, nothing could be further from the truth. Most traders and investors believe they need to be invested all the time. This is categorically false. There are times when you should be sitting in cash, monitoring and stalking your targets. There are a number of ways to distinguish where we are in the market cycle. There is the traditional stage 1, stage 2, stage 3, and stage 4 methodology for investing. Additionally, another method is the market index is flat or up. Over the last 6 months, you have the option to be in the market or out, but never short the market. If the index is down over the last 6 months, you are either out of the market or short the market. You can never be long the market in a downtrend. Entry techniques: once you've completed your stock scans and reviewed all the charts, you have a select list of stocks that will require stalking. Sort your list from strongest to weakest candidates with a huge concentration on the first 16 names. The ranking of the strongest stocks to the weakest is often based from highest price to lowest price, but not always. This is counterintuitive for most new traders. On a risk-adjusted basis, risk versus reward, the sooner you concentrate on the higher price stocks, the sooner your account will demonstrate meaningful growth. Once a trend line is penetrated on increased volume, you initiate your position. Rule number 2, your initial stop loss. You need a series of rules trailing your stop loss. An example is if you have a $70 stock, you set your stop at $2. This remains your stop until you're showing a 20% profit. Once you're at this level, never let your position return for a loss. However, there will be times when your position is up almost 20% and then it reverses on you for a break-even trade. Although this is very disappointing at the time, over time, the maximum allowance given to a stock more often than not will reward you over a campaign. The masses fear that their profits will disappear, so they take a sure small profit and hope their initial losses will turn into profits. This is completely opposite of what successful traders do. What you should do is hope your initial small profit will turn into a huge one. You should fear your small initial loss will turn into a much larger loss. Rule number 3, the continuation of the trade. Once you have initiated a new position, a number of items needs to happen in a very specific order. After the breakout on heavy volume, you need a follow-through day. This is another upward day, usually on above average volume, but it doesn't need to be. The strongest stocks demonstrate this follow-through day on either day 2 or day 3. As the follow-through day gets later, you should have less conviction about the trade. After the follow-through day, it is not uncommon for the stock to experience a light volume pullback. This is completely normal. Now we have to figure out how to adjust our stops. The Stock Picker Momentum System is designed with the benefit of multiple exit signals. We follow the system and not allow our ego or emotions to cloud the task at hand. Our opinion does not supersede our rules. One exit method is the partial profit exit, or commonly referred to as the harvest exit. The partial profit exit comes into play once the stock is trading in an upward trajectory. It has 2 components to it. The first component is moving your stop up to break even upon a 20% appreciation of the stock. At the same time, you harvest 25% of your position once that 20% threshold has been accomplished. This happens automatically without thinking. It results in a win-win scenario. If the stock reverses and heads downward, you have harvested 25% of the position, allowing yourself to lock in profits. However, if the stock remains in an upward trajectory, you still have 75% of your position participating in the additional increases in price. The fourth rule is money management. The second most important section is money management and position sizing. I have spent countless hours testing and researching this subject. There are so many facets to this subject, and it is probably the most misunderstood topic in investing. The majority of people spend the vast bulk of their time on entry techniques. This is a sign of an inexperienced trader. It is so important to match your money management system to your trading system, otherwise negative results will follow. Some profitable systems will turn negative with the wrong money management system, just as some trading systems will improve and show a profit with the correct money management system. There is almost no worse feeling than having a huge winner and not having much of a position on the trade. Probably the only worse feeling is picking a stock, then never buying it, only to see it increase 300 or 400% on you. Trust me when I say that I've lived through both scenarios, and the expense to your mental capital is almost overwhelming. Money management is discussed in specific detail within the book, How to Be a Successful Momentum Stock Picker. And the final point is the psychology of trading. After you've mastered the basic math required to initiate your investment account, the next most important element to successful trading is mastering yourself. To trade successfully, one must stay in the ever-present moment of now. The past cannot help you, and the future hasn't happened yet. It is not until you have systems and processes in place for every scenario that will enable you to trade confidently. Success will then come. Remember, investing has 4 simple rules. Cut your losses quickly, ride your winners, trade with the trend, manage your risk. If you're watching this anywhere else other than at the StockPickerLetter.com website, head over there to watch video number 3. Wishing you successful campaigns, the Stock Picker. Thank you for watching this video.